So fellas, it's another new day, currently 10:40 May 2nd 2025, and I am going to backtest. I've been doing some lectures. I've been learning standard deviations from Justin Welling, and hopefully I'll apply them to my backtesting sessions. So hope you tune in, and maybe sometimes these sessions will be like, I don't know the exact name they give them, like the no voice backtesting sessions, because when speaking drains me out of way too much energy, and for more than 30 minutes, I don't know, it becomes a bit too much. So well rested in the morning, that's why probably my voice is low. So let's do some backtesting and hopefully we'll get some good views of this. Great, so let's go to FX replay. So what am I going to do right here? We're going first to see the projection of this. The 1 month, we can see that it's heading higher. Okay, you can see that it's heading for the upside, of course. The weekly, same thing. Daily, it's showing the same thing except from this price leader was dropping a bit, but it's going high because of this OB right here. When we go to the 2 hour, we can draw it well, right? This order block right here, which the market is reacting to, and you can see that liquidity was swept off of here. You can see that this small sweep, and we would expect to push higher and target this buy side and even go higher. So if I remember how to use projections, we get the false move, which was the sweep, like this one, then target higher like this. Sorry, I mean like this, yeah, this high, this low, exactly. So I think we will have to add, okay, yeah, we'll add the 2.5 and we'll add the 2. Okay, so I might probably target the 2 in case we don't know where to exactly target when it's an uptrend. That's what we should do. That's what I recently learned. Alright, so after retracing to this thing, to this order block, I'd expect some upward moves. So this is Friday and it's the AM session. Let's go to the 1 hour and see what we've got. So first we've got this gap right here, and you can expect market to retrace into it. This gap, you can see it. So before we remove this, let's mark up the 2 level, this level right here, exactly. And after tracing from this order block, I can expect market to push prices higher. So the 930 move, let's see how it was. The 930 move was a push to the upside, of course. Okay, that's nice. And we can see that this was also this order block, this precise order block which market reacted to, this one right here. Okay, so after reacting to this from this 30-minute OB, can expect market to push prices higher, take out this buy side liquidity right here, and maybe reach the standard deviation 2 level. So we can name this something else. Can put text top right. Okay, so this is the 2 standard deviation level, and we can also have buy side marked up right here. This great. So when we go to the 15-minute now, I expect to see somewhere to enter from and then push higher. Okay, so first you can see perfectly gap retracement into here, and we can see that we had our shift internally somewhere right here, and this will be a good time to wait for a setup and then we enter. Okay, you can see now it dropped again into this order block it had created, and with the 5 minute you can see that it is a precise OB right here, which will give us a good entry. And I'll place my buy somewhere on this reaction and TP below this low with the 15 minute. Then target this first high. Our first TP will be right here. Our second TP will be on this buy side liquidity. So let's target somewhere in here for the first TPs. Let's see how this one goes. Okay, you can see take profit has been hit for the day. That would be a very good trade, and we are having a retracement. We are still sure that the market will push higher though, so let's see if we can have another trade off of this. So this was on Friday and it pushed until the start of Monday. That's when it hit TP. So this trade took like almost 2 days. Damn, this is crazy. From Friday, oh yeah, it took 2 days because they skipped the weekend. So this trade ran over the weekend. No worries. I was wondering, I didn't know they counted those days, but it's really crazy how it just created wicks as if I had seen this in hindsight. Let's see how it's now starting to drop, and this is Monday, so I think we'll have to journal this. So let me keep the image. Oh, sorry. Alright, so let's see if we can get a move on Monday. So the London session has already started right here. Let's mark up the London. I like to mark up London from 2 somewhere here, right here. London started here. The color, let's make it like green. London session, and it will end most likely in the afternoon at 10, somewhere there. At 10, this is where London session ends, but let's put this one at 9:30 because when New York session has started, we can expect these few hours before it to be the kill zone in between here. So you can see the London high right here. Okay, you can see this big drop as New York open. So we have London high, Monday London high, and when we got the daily, yeah, sorry, there's too much clutter in here, but let's do something like this. When we got the daily, you can see that Monday has already took off Friday's high, and we've got Friday's low right here. So this is a great liquidity point, so can mark this level as well, this low as Friday's low, Friday low. So basically I really like the concept of trading liquidity, like trading towards where the liquidity is. I mean, you can't trade off of blind. You shouldn't be trading blindly. So let's see what the market does, as it might be approaching some liquidity levels, and Here our narrative is still bearish, of course, because the narrative is to take out this buy side liquidity and probably reach it to this standard deviation level. That's our narrative. But then our bias, which comes after the narrative, is to show us what price is actually doing in a smaller view. Because when we go to the 4 hour, you can see that we are in an uptrend. Why? Because this candle closed higher than this one closed higher than this one, then started a corrective move, and maybe when we break this one or break below this one, when we close a candle below here, we can now make a conclusion that we have shifted structure to the bearish, which will make our narrative now bearish. So the narrative is basically we're targeting to take out this liquidity level, take out this liquidity level, hence doing certain market conditions such as hitting another block and going higher. So that's how narrative is according to my understanding. And then bias is what the market is showing prior to the inner, if I can say, to the lower time frame or the inner section, yeah. So on the outer section you can see this upside move, but when we go to the 2 hour we can see a slight drop going lower. So our bias will be bearish for the moment. So maybe let's see what liquidity levels we might be targeting. We might be targeting this Friday low, or targeting to break, to bounce off of this order block right here. So let's go to the 30 minute now. Right, so 30 minutes we haven't got any entry yet, but you can see it's still trying to go low. And basically when we go to the 15 minute, you can see it push a bit higher again. Okay, so as per this, you can see it's reacting to these order blocks, and it has currently took out this high. So after taking out this high, it started behaving somehow a bit in an accumulation, but let's see if it provides an entry criteria. Took out the high again. And we've got a market crash right here. So Monday it ended up becoming bullish, and here was an entry. You can see it right here. Go to the 15 minute. You can see we are still targeting the London high on Monday, but we didn't reach it. So a simple conclusion from our tape reading that just happened on this Monday is, well, according to the narrative, we can focus on the liquidity points, and according to the bias, we would focus on some POI, such as a reaction off of the order block. Like if we are having a corrective move, we expect a reaction off of the POI and then look to go higher on, depending on the narrative, targeting the liquidity points. Basically, the reason I was mentioning that is because you can see that this liquidity level of Monday's London high is still being targeted, even though it will be like somehow aligned with Tuesday's London high. Okay, not Tuesday's London high, because we are almost New York session. So let's mark up the start of New York, 9:30 right here. And when we play it, as it moves on, you can see a quick reaction of some levels, and as New York opens, we can see it trying to drop a bit. So we have some relatively equal highs right here, you can see, and so which means there's a great pool of liquidity right here. So what we'll go is we'll go to the 5-minute and wait for an entry. Okay, so for me, my bias is bullish on this one. So when we look at the 15-minute, you can see reaction off of this order block, right? This one right here, right? Then hit it, then expecting to push high, take out these equal highs, and maybe look out for these liquidity levels as well. So let's extend them. Okay, so let's go to the 5-minute now. You can see that we've hit our order block as a retest. So we have our sweep, shift in structure, and a retest. We got a sweep here, and I'll put it in the center. And we will have a market shift in here. This is MSS. Well, the reason I backtest while speaking is because I don't know, it helps me know the concepts more, and maybe it will get me to the being familiar with the concept of teaching, because it's never clicked with me. So maybe this will get me familiar with it. And so our entry right here, stop loss below this low, we target the highs right here. Well, wait, the London high is actually here, so we would get our first TP right here, and this London high, it should give us a 2R, or we will hold it until it reaches there. So there's not a high chance of it reaching that place without touching this low here. Maybe we'll have to adjust our stop loss somewhere in these lows. This is possible, but getting this 5R trade, I don't know, this low will be kind of vulnerable. So maybe we'll target somewhere here, and let's see how this one plays out. So straight into stop loss, as you can see. So not quite a good day. Let's channel this as well. Okay, so I'm back to 15-minute. You can see it's dropping as crazy, and probably heading for this liquidity below here. Go to the 30-minute. You can see the transition from Tuesday to Wednesday, there was a very big gap in here. There was a volume imbalance, and we would expect to enter off of this, because obviously it's gonna be filled, then maybe it might push us higher off of it. So first of all, let's remove some graffiti here. Remove this, and what we can see is that we've got this low taken out, without ignoring that we still have liquidity on the upside. This will be a sweep, and internally right here we'll mark a shift, lower high taken out. So market shift will be somewhere in here. 5 minutes, we'll look for entries to make us reach to the upside. I don't know if we'll trade London session with this, but it would have a good entry trying to target this buy side liquidity. So London hasn't even actually panned out. New York hasn't come in just yet, and you can see that buy side has already been taken. Almost. Oh yeah, now it's been taken. And our second standard deviation level was a few ticks away from it. And you can see it's also been taken out. So we're now heading higher and higher and higher as time goes on. When you go to the 4-hour time frame, we can see that we have this big push up candle. Let's move this. You can see this candle right here from Wednesday. This is Thursday, and maybe it will push even more higher. So you can see a reaction off of this order block and then a push higher, as you can see it in the high time frame. Order block, reaction off of it, market pushes higher on Wednesday. Great. So let's remove this, and so let's move this, and let's go to the 2-hour time frame. And go to the 2-hour time frame. You can see market bouncing off of some key levels, pushing higher. 1 hour. So we would look for a false. We're going to look for a false downward move, a manipulation move, and then that one will give us a standard deviation level to target. So yeah, you can see this sweep move right here. It's our false move. So a standard deviation from this level to here would give us right here. This is the next two target, between 2 and 2.5 target. Yeah. So basically our level will be somewhere right here. Let's remove this, and we will be targeting this as prior to this move. So when we go to the 30-minute, you can see reaction of another block, push higher, the block push higher, and as 9:30 comes in, let's see which kind of move we will get. So we've got a drop, took out this low, 5 minute, no entry, 1 minute, then provide an entry here as well. But you can see we've got a sweep and a shift. We've already got pretest small one in here. And as we play price, you can see it actually dropped into here, and we would expect to take a trade to target the upside. So let's take a small trade inside of here, target the second deviation level, and it will be a 1 to 2 somewhere in here. Okay, you can see a full reaction into the order block. So what mistake did we make? We entered early. We should have waited a bit and entered somewhere in here. Stop loss below this candle and target the standard deviation. So the goal is to hit the standard deviation. So we can say that we made a mistake on that entry, because in the end you can see that our standard deviation has been hit. So key takeaways from this lesson is look for high time frame POIs and look for standard deviation levels on false moves, because you can see that they work out and give a crazy risk to reward. Anyway, so thank you for panning in today, and until we meet again, be safe.